updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this big earnings Thursday. We have got the Dow, the S&P, NASDAQ all advancing, S&P at a record. But first, we begin with Facebook. It is renaming itself Meta, highlighting a shift to an emerging computing platform focused on virtual reality. CEO Mark Zuckerberg says, quote, "The Metaverse is the next frontier." Facebook's name change is the most definitive signal so far of the company's intention to stake its future on a new computing platform, the Metaverse. The new ticker symbol, MVRS, is effective on December 1st. And right now, we do have shares of Meta moving higher, up now by 3.2%. Apple and Amazon will be reporting after the closing bell. Poonam Goyal is a senior retail analyst at Bloomberg Intelligence. She'll be paying close attention to Amazon Web Services, Amazon's cloud business.
I think they're going to have a strong number when it comes to AWS, which investors will be looking at. They reported a 37% increase last quarter, and we think consensus for around 33% is a little conservative. On the online sales front, we've heard from other companies. Obviously, they're dealing with tougher sales comparisons, so there's a mid-single-digit increase expected. If they can beat that, that would be great news.
And Amazon up now by 2.3%. Apple also after the bell, it is up by 2.4%. Industrial bellwether Caterpillar rising after an earnings beat. Shares of Caterpillar up now by 3.2%. Ford soaring after lifting forecasts and resuming dividends. Ford shares up by 8.9%. eBay dropped after reporting disappointing results. eBay right now is down by 7.4%. S&P up 35, about 0.8%. The Dow's up 0.3. NASDAQ higher by 1.2%. 10-year yield 1.56%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So it's official. Meta, formerly known as Facebook, the artist formerly known as Facebook.
Are you going to keep calling it Facebook, or are you going to start calling it Meta from day one?
Technically it's still trading right under Facebook. It doesn't start trading under the new ticker until December 1st. So I guess it's going to be kind of one of those Google/Alphabet, that confusion that we went through initially when they made the name change.
Well, that's what I'm wondering. Unfortunately, now Ed Ludlow is joining us. He's West Coast correspondent at Bloomberg News. He's on site from Facebook headquarters in Menlo Park, California. I believe he's at one hacker way in front of what was, until today, a famous Facebook like sign, thumbs up, that you're seeing on YouTube right now. But now the sign has changed. Ed, when did they pull the cover off that brand new sign that you're standing in front of?
9 seconds
Wow.
after Mark Zuckerberg announced it.
Wow.
9. And it was amazing. Over my shoulder, they're standing there. It had this temporary canvas over it. And whoosh, they just pull the canvas off the sign. It's that famous sign everyone knows, right, for our radio audience as well, with the thumbs up like symbol. And it's changed now to this Meta symbol. But what you guys were discussing in the intro is the most important part. What changes? And really, this is a change in name only. No change to Facebook's corporate structure and no change to the names of its properties, right? Facebook, the website and app stays the same. WhatsApp the same. Instagram the same. And many had speculated that they might form a new entity, restructure with a holding company like Alphabet did, but that wasn't the case.
So what's the significance of this? Is this a company, just like when they were late to mobile but quickly pivoted to mobile, is this a company realizing the future is going to be different going forward, and we're going to pivot now, and we're going to, telegraph that very clearly to the world? What are we as investors? The stock's up 3% now, so we did see a kick up on this news. What are we supposed to take away from this, Ed?
To be fair, Zuckerberg and other executives have been talking about the Metaverse for some time, about how for Facebook, the Metaverse is the future, where we interact with one another virtually, not just for simply gaming, but during his presentation, Zuckerberg talked about e-commerce, about conducting business meetings through virtual and augmented reality using the Oculus headsets. He talks about healthcare, using the Oculus headset exercising in virtual spaces with others. Imagine a Peloton class that is virtual. I can't quite get my head around that. But what has been made so clear about the Facebook equity story in the quarter just gone this week, in the prior quarter, is its vulnerability to those Apple iOS changes. And by extension, its dependence on ad revenues. And we know that they bought Instagram, we know that they bought WhatsApp, but they found it hard to monetize those. And really, this is what Zuckerberg saying, this is the first big step for us towards a future where we monetize through our virtual reality investment in Oculus, which was 2014.
It also has made me think a lot over the last... Go ahead, Carol.
No, you know what I'm thinking though? I'm like watching the video that Mark Zuckerberg put out here, and at a time where we are talking about the world needing greater transparency, we're now talking about creating, an alt reality that could mask so much. And so I guess I'm trying to get my head around it. Just call me a purist. What can I say?
Yeah. Well, one of the big points that Facebook stressed was that privacy is going to be central to this, right? They said that there will be the same parental controls, the same privacy policies in Horizon, the Apple platform that the Metaverse will exist in, or you know what I mean?
Yeah.
But also that there will be no substantive changes to data, to user data, how they handle it. I think those are big questions. One hypothesis put forward by Wall Street is that if Facebook had gone further and had done a holding company where each individual business unit was separate and isolated, it might have given them some reprieve or insulation from antitrust interests, right, from regulators, but they didn't do that. And really, likes of Reid Hoffman have raised this question, right? This doesn't change anything for Facebook's existing problems.
Right. What I was going to say is almost 20 years ago to the day, Philip Morris in the U.S. changed its name to Altria. And they did that partly to disassociate the name of the company from cigarettes and from the danger that cigarettes have caused the world and the U.S. And I'm wondering if this changes anything for regulators or makes them think at all differently about the company.
Yeah, I don't have the answers to that, and I know that's a bit of a cop-out, but, as I said, it's a change in name only. Zuckerberg and Nick Clegg, who's the Vice President of Corporate Affairs, the former British Deputy Prime Minister, just stressed that, look, we are aware of the criticisms that people level at Facebook. Zuckerberg actually said there's no good time for Facebook to set out its plan for the future because people will raise questions about what it's doing with its present issues. But he said there's no time like the present. They acknowledged all of the criticism around content moderation, about the safety of the platform for children. But at the end of the day, as I said, this is about diversifying, moving away from the ad platform that we know, the core blue Facebook.com platform,
right,
to a future where people engage differently with one another.
Well, and to be fair, we are now having a very different conversation about Facebook / Meta right now because we're talking about the name change and the focus of the company. And if I look at Wall Street, investors are cool. More than 82% of the analysts that cover it put a buy rating. 51 of the analysts that we survey here at Bloomberg have a buy rating. 8 holds, 3 sells. I mean, overwhelmingly, investors seem to be okay about all of it, Ed.
We're talking about a company that is going to record $118 billion in fiscal 21, according to estimates, that regularly posts top and bottom line growth that is in the very high double digits. There was disappointment in this quarter. Why? Because we saw the brunt of the impact from the Apple privacy tracking changes, right? That was clear, and there was commentary about it on the call. But at the end of the day, this is an incredibly high margin business that is setting out the future where it's not dependent on that high margin business. It's going into other areas that it's confident that can generate revenue. One real quick one, Zuckerberg said by the end of the decade, the Metaverse may reach 1 billion people, 1 billion, but it will generate in the region of hundreds of millions of dollars of revenue. That gives you a sense of scale, right? It's going to be a long, long time before this is the core of the business, but it's the first big step to diversifying.
Just very, very briefly, 20 seconds, how do they monetize the Metaverse?
Right. 2 ways. Hardware, Oculus, brand new headset announced today, high-end, expensive, high level of functionality. Second way, services. Think about video games, Roblox, Minecraft. You buy things within the game, and that's indeed what Facebook wants to do, but it wants to do e-commerce. It wants to do business-to-business interactions, meetings, so you don't take an airplane. And as I said, healthcare was a really interesting take for me.
Another headline crossing from that event, Meta unifying payments, financial services under Facebook's Novi brand. That was the brand name, I think, created back in 2020. money for kind of the digital wallet that they created. Ed Ludlow, be careful. Get off that highway. We're worried about you outside Facebook/Meta headquarters. You're listening to Bloomberg Radio.
Let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden is trying to rally Democrats around a new framework for a massive $1.75 trillion spending bill.
It's fiscally responsible. It's fully paid for. 17 Nobel Prize winners in economics have said it will lower the inflationary pressures on the economy.
But despite those positives, progressive Democrats in the House say they still want to see the language, not just the framework, before voting on the other key piece of legislation that the president has proposed, that bipartisan infrastructure bill. Well, Biden had wanted some sort of action or deal before leaving for Europe to attend the G20 and COP26 climate talks. China has delivered a blow to those climate talks before they've even started, as we hear from Bloomberg's Amy Morris.
China says it's sticking with its existing climate change targets to zero out emissions. That reduces the chances for any more ambitious global action at the COP26 summit in Glasgow. By not advancing those key targets, China is now adding to the belief that we're not going to see any major agreement to accelerate action to limit global temperature rises to 1.5 degrees Celsius. Under the Paris Agreement, countries are required to upgrade their commitments every 5 years. In Washington, I'm Amy Morris, Bloomberg Radio.
You've been hearing it here on Bloomberg. Facebook is rebranding itself as Meta to better reflect its new virtual reality vision for the future. Founder Mark Zuckerberg says the new Metaverse that they're creating would enable people to interact by entering virtual environments using devices powered by augmented reality. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons there in the nation's capital with a check on world and national news for us. Lizette Chapman putting out a story this morning, and no doubt about it, getting a lot of traction on social media. This has to do with one of the founders of Palantir Technologies, prolific venture capitalist. We're talking about Joe Lonsdale.
Yeah, he tweeted yesterday, I believe, that great for fathers to spend time with their kids and support moms, but any man in an important position who takes 6 months of leave for a newborn is a loser. So calling people who take paid paternity leave, men who take paid paternity leave, fathers, 6 months are losers.
Yeah, the comment made in response to a tweet about Pete Buttigieg, of course, the U.S. Transportation Secretary took time off to care for his child, and criticism from the podcast personality Joe Rogan.
I have a lot of thoughts.
I am speechless. And I'm not often speechless.
Well, look, a lot of people came to the defense of policies that, and look, we're at a time right now where many Americans are looking for policies from Washington about paid paternity and paid maternity benefits. Alexis Ohanian and Gary Tan defended their own parental policy, which is 4 months. Alexis Ohanian, the co-founder of Reddit, he's also venture capital with Initialize. Tan said he took the leave when he hoped his employees would follow suit. I've interviewed Alexis Ohanian about parental leave, and this is one of his main causes right now. Actually was in Washington, D.C. when he was there, meeting on the Hill with lawmakers about, and this was during the Trump administration, about getting parental leave in legislation.
I mean, I have a husband who took on childcare big time in my relationship and our family. So it's, we just kind of went as it made sense. And I think if we continue to perpetuate certain stereotypes about who is supposed to take care of kids and aren't more open in our thinking, well then, so much for women ever getting really advancing in this world.
I have a lot of thoughts on this.
I am kind of burning inside.
Yeah,
I'm
I think a lot of people are, Carol.
Anyway, he's a critic of woke politics, as they say, so no surprise.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks close to session highs. New name for Facebook. Lots going on. Let's get right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the green right now, with the Dow currently up 143 points. S&P's gained 35. NASDAQ rises by 186. The U.S. 10-year yield at 1.56%. Gold is up 4 points. Transports gain 175. And Bitcoin is higher by 1.4%. Among the main 11 S&P sectors, all were in the green, led by gains in consumer discretionary, industrials, and real estate. And leaders to the upside in the Dow, Merck, Caterpillar, and Apple, while Visa and American Express led to the downside. After earnings, Northrop Grumman and eBay both fell 7%. Altria dropped 6%, but Ford rose as much as 13%, to the highest since 2014. In other news, Impossible Foods is said to be in fundraising talks at a $7 billion valuation. And wrapping things up, Amazon and Apple report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So, truth be told, full transparency, I cannot keep up with the negotiations around the tax negotiations in Congress.
You're the only one.
Tim's like, I don't want to appear like I don't know what's going on. But I don't know what's going on. We don't know what's going on. We did, though, hear from President Biden when it comes to some of what he's trying to do. Let's listen to what he had to say earlier today.
These plans are fiscally responsible. They are fully paid for. They don't add a single penny to the deficit. They don't raise taxes on anyone making less than $400,000 a year.
That was, of course, President Biden earlier today. Fortunately, we have two people with us who know exactly what's going on. They are Jody Schneider, political news director at Bloomberg TV and Radio. She's with us in the Bloomberg Interactive Brokers studio. Also, Joe Matthew, an anchor for Bloomberg Sound On, airing weekdays at 5 p.m. Wall Street time. Jody, so what is happening in Washington? Help us keep it straight.
Yeah, it's a little nuts, I agree. So before President Biden left for Rome, which he just did around a little afternoon today for G20, he's also going to meet with the Pope. He's going to go to the Environment Conference in Glasgow. He really wanted some kind of deal on what he's calling the Big Build Back Better Plan, BBB, which is a lot of programs it includes things like school, actually, for 3 and 4-year-olds, preschool for 3 and 4-year-olds, help with childcare for many American families, really a whole host of kind of societal measures. It is different, it is separate than what we are calling the infrastructure bill, which is $550 billion bill to fix the country's roads and bridges. But to get that bill, which frankly has already been passed by the Senate, the $550 billion infrastructure bill, he had to get a deal to get to on this other one, the Build Back Better, or the progressives in the party were saying, we won't even vote on infrastructure. So before he left for Rome, that was his self-imposed deadline. He wanted to do it, and so he announced a framework on the Build Back Better. Doesn't mean there's going to be a vote. It doesn't mean a lot of the details are known. And frankly, we're hearing from some progressives that they won't vote on infrastructure until they can see all these details in Build Back Better. And they don't like some of what was left out, namely parental leave.
All right, Joe Matthew, come on in. You've been zooming around the nation's capital, in and around Washington. So what is the, tone, the mood? What are the conversations you're hearing kind of behind the scenes here?
It was pretty crazy at the White House. I just got back from over there, and I was on the South Lawn when the president decided not to take any questions. He walked straight out the portico, holding hands with the First Lady. Off they went in the helicopter with something to show for it. But it was interesting the speech that he gave from the East Room didn't get into any details at all. And at this point, it's a little bit easier to talk about what's not in this bill because we've all discussed this a lot for weeks, right? Mm-hmm. We've got Some big priorities that for Democrats that are not in this bill. There's no expansion of Medicare to include dental and vision coverage. There is no paid leave. That was huge, not just for progressives, but for Speaker Nancy Pelosi herself. And they are all pledging to continue the fight for it. No prescription drug pricing plan. They did get, to Jody's point, universal pre-K, a couple of others. Not quite the climate package they wanted to have. It's a lot of money, $555 billion, but not that clean power grid component that Joe Manchin knocked out of the final bill. So this is where we are. There's no billionaire tax as well. Remember, we spent days talking about this.
Is that dead in the water?
Apparently dead in the water.
Okay.
No mention of a tax on unrealized gains. They're going to pay for this with a 15% minimum corporate tax and a surtax as well, 1% surtax on stock buybacks. That's important to a lot of our listeners. Also a surtax on millionaires. 5% for those making $10 million or more, an extra 3% if your income tops $25 million. I won't ask anybody if that includes them. But look, this is
I secretly think it includes Tim, but he won't.
You know, I didn't want to say.
I've seen that Bentley parked out in front of 731.
Everyone knows it's Tim. Anyway, so
you're among friends.
The question is, are we going to get a vote tonight on hard infrastructure? Nancy Pelosi says maybe.
Hey, Jody, still, it's clear to me, but
sorry, Tim.
It does make it difficult for voters to follow along, and that's an issue. And I wonder about Joe Manchin, and I wonder about House and Senate Democrats who are on the more progressive side of this and how they could undermine it.
I just got about 30 seconds.
Yeah, and I think they may not want there to be a vote on infrastructure so fast. That's what we're going to see. Nancy Pelosi may be able to twist enough arms. She's not going to bring it unless she, knows she can get it. But the question is on the other bill then, where does that go? So again, framework, he got what he wanted, as Joe said, enough to get on the plane. But there's still a long way away from having these two bills passed.
Hey, Joe, last few thoughts. I mean, if he still gets a bill that's close to $2 trillion or just under, that's a lot of money.
Yes, this is the part that a lot of people are forgetting in the minutia here. Just imagine the victory parade for Democrats. We got $1.2 trillion they could say on infrastructure, almost $2 trillion on soft human infrastructure, whatever you want to call it, following the COVID stimulus. These are plans that never existed before. $3 trillion, that's something that the president can take credit for.
Right, I can see
it passes.
I can see the campaign ads.
That's a big if.
It's kind of infrastructure meta, right? Meta infrastructure.
Back to meta.
It's all about meta. Jody Schneider, thank you so much. Political news director at Bloomberg TV and Radio here in our interactive broker studio. And of course, Joe Matthew, host of Sound On Bloomberg Radio. Coming up at 5 p.m. Wall Street time right here on Bloomberg Radio. Joining us right now from our 99.1 studio in the nation's capital. Now I have a better understanding. But it could change. Maybe a little more.
And hey, we didn't even talk 2022.
We got time.
Okay.
We got time. You're listening to Bloomberg Radio. Carol Master, Tim Stanovic. This is Business Week. And coming up, Dave Wilson and his chart of the day. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Do you think you'll have a song that's like,
I know.
Meta
I was just going to... Oh,
is there a Meta song? Oh, what are you
I was
thinking?
just thinking there was going to be something about Meta.
I know. Is there a song about Meta?
He just, but he decides on the song of the day, but he decided on it before Facebook's name change.
Yeah, but you could flip. Dave's quick.
Oh, he could. You're right.
All right. Anyway, we're going to get to the chart of the day and Dave Wilson in just a moment. He's walking in. Meta. I don't know. Okay. Charlie Pellet, what are you? What?
My song of the day, earnings, because we've got Apple, we've got Amazon. We'll be all over those as those break. Shares of both companies, they're pushing higher right now. Apple up by 2.4%. Amazon up now just about by 2%. Again, those numbers break after the close of trading. The Dow, the S&P, NASDAQ all pushing higher. S&P, NASDAQ, we are looking at records right now. NASDAQ up 196 points, up 1.3%. NASDAQ 100 index up 1.1%. S&P up 37, higher by 0.8%. The Dow up 163 right now, higher by 0.5%. 10-year yield 1.56%. 10-year down 7/30 seconds. Spot gold up 1/10 now, $17.99 the ounce, fluctuating between gains and losses right around that 1,800 level. And West Texas Intermediate crude up 0.2%, 82.84 for a barrel of WTI. Stocks at records as fresh signs that corporate America is delivering on lofty earnings expectations propel major indexes toward the best month in a year. Citigroup is going to require all of its American employees to be vaccinated against COVID-19 as a condition of their employment, citing new orders from President Biden. Across the country, many workers facing the choice of jab or job. In New York, the city last week said it would require all municipal workers to be vaccinated against COVID-19 by 5 p.m. tomorrow and eliminate a test-out option. Those who aren't vaccinated will be put on unpaid leave. Dr. David Dowdy is an epidemiologist at the Johns Hopkins Bloomberg School of Public Health.
These mandates are working. I mean, people are getting vaccinated because they would rather get vaccinated than lose their jobs. I think every city, every company has to make this calculation about are you willing to deal with having fewer staff around at the expense of having a safer workplace?
Dr. Dowdy with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking vaccine stocks, Pfizer up 0.3%. Its German partner BioNTech, its ADR is up 0.6%. AstraZeneca up 0.4%. Moderna up 1.2%. J&J on the minus side, down by 0.7%. Facebook changing its name to Meta, shares up by 3.5%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
She's getting them.
Wow.
She is a big proponent of getting it away from that manager who made a lot of money. Scooter Braun, is that his name? Yeah, there's been a lot of conversations in our house about that. All right, so shake it off. Chart of the day.
Well, you look at what's going on in the oil markets this year. Crude's heads for its biggest gain since 2009 in New York trading. Last I checked, it was up something like 70% for the year. So, I mean, it's been going up like crazy. And at the same time, stocks have been going up. It's like, what gives here? Because, you think back historically, if oil went up, stocks didn't do well and vice versa. And I actually had somebody ask me about this the other day. Fortunately enough, Liz Ann Saunders at Charles Schwab, who puts out a bunch of charts on Twitter. I go through them on a daily basis looking for ideas. So if you're on Twitter and she's not on your feed, put her on there. It's not like I'm getting paid for this endorsement either. In any case.
Liz says thank you, Dave.
Oh, well, okay then. What she did is run a correlation between the S&P 500 and a Bloomberg oil price index, which is only monthly, but the idea is it goes back for decades, so you can really see how crude has changed in price over time. But you do a 2-year correlation between the two, and basically it's been positive since September 2009, except for 1 month over that period. What it basically means is that oil and stocks have tended to move together. Oil goes up, stocks go up, and vice versa. That's not what you saw in the decades before then. I mean, the chart has a lot of red ink where you saw what are called negative correlations. Oil went up, stocks went down, that sort of thing. So the relationship has changed over time, and in a year where, let's face it, if you've got the kind of gains that crude has, you could really see stocks take a beating if sort of that old relationship were in place. It's not there. I mean, think about it. Energy stocks are only about 3% of the S&P 500. That's part of the mix,
Isn't
for sure.
it? That's what I was thinking about, what the market is. If you think about the companies we've been talking about the last week or so, Facebook, Google, Netflix, Amazon, I mean, these aren't big industrial companies that are using potentially a lot of oil or impacted necessarily by higher oil prices.
Yeah.
Right?
Absolutely.
But if oil prices go up and costs go up as a result, and Americans have to pay more and they for getting around, then they won't be able to pay for other stuff, the services that these companies offer.
It's just a question of how well companies can manage that situation, and how well consumers can too. Because let's face it, you have more fuel efficient vehicles than you had in the past. An increasing use of electric vehicles. You get around the whole oil price equation entirely. So there are a lot of variables in here that would help explain why the equation has changed. If you want to see this correlation chart, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Stock of the day, do it quick because you have a quick story I hope we can get in.
Okay.
Before you leave.
Alnylam Pharmaceuticals, ticker ALNY. Third quarter results didn't measure up to estimates, and the CEO, co-founder of the company, he's stepping down at year end. That's always tough. Alnylam's down more than 16%. Trading at its lowest price in 5 years.
All right, Meta. You walked in and told Tim a story. You got about 30 seconds.
Chan Zuckerberg Initiative, the charity that Mark Zuckerberg and his wife Priscilla Chan founded. Their first acquisition back in 2017 was of a company that does data analysis of medical research. And you know what the name was?
Dun, 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 dun.
Meta Incorporated.
That is something to talk about over your martini tonight, because that is just wild.
4 years ago.
I know. It all kind of ties.
And change. What goes around? Practically. I mean, that's right. Almost 5, because it was February 2017.
It's why Dave is a national treasure. I'm just going to say. All right?
Let's head to Washington, D.C. for check the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden made one last trip to Capitol Hill to outline his compromise economic plan and to warn fellow Democrats their future majority and his presidency will be determined by its path through Congress.
The president announced his compromise with key legislators.
We spent hours and hours and hours over months and months working on this. No one got everything they wanted, including me. I know how deeply people feel about the things that they fight for. Any single element of this framework would be viewed as a fundamental change in America. Taken together, they're truly consequential.
The president ticked off what survived in the plan, including home health care for the elderly, preschool for children, high-speed internet, the child tax credit, and tax credits to promote electric cars, and other actions he can outline at the International Climate Conference. In Washington, Irv Chapman, Bloomberg Radio.
As we've been telling you, a change is underway at Facebook, with founder Mark Zuckerberg announcing this afternoon the company has a new name.
To reflect who we are and what we hope to build, I am proud to announce that starting today, our company is now Meta.
Zuckerberg is hoping to attract more young adults by leaning into virtual reality and creating what he calls the Metaverse. where people can communicate and interact with one another. The Justice Department is settling with families who sued after the deadly shooting in 2015 at Charleston, South Carolina church. Families of the 9 killed by Dylan Roof will get between $6 and $7.5 million. Those who survived will get $5 million. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, so remember earlier this year, we talked about Miami.
Yeah.
We've
been talking about this year. Yeah, and we've talked to, I've talked to Mayor Francis Suarez.
Yeah, we have. Yeah. And so the Miami mayor, Francis Suarez, said the city is set to draw on its crypto wallet for the first time at the end of the month.
Well, speaking in an interview from New York, Suarez said the city decided internally to cash in its more than 8 million tokens at redemption value of about $17 million.
Yeah, it's a relatively small transaction, okay, as crypto trades go, but it could be meaningful for the relatively small market capitalization token that Miami has in its wallet. Miami Coin was the first so-called city coin, works on the Stacks protocol. Outsiders can send Stix, I guess it is, Stix tokens.
Stix, STX.
To mine Miami Coin, and 30% of that goes to the city's designated wallet. Stix was last trading at $1.91, had a market cap of about $2.4 billion, according to CoinMarketCap.
There was initially some caution around whether and how to accept the money, in part because local governments in Florida are legally prohibited from holding or investing in volatile assets such as cryptocurrencies. But in a meeting last month, city commissioners voted to accept the money.
So, okay. So we're buying these cryptocurrencies, and then we're going to pay for things using the cryptocurrencies? Don't look at me like that.
I guess. I don't know.
I had this conversation.
Mayor Suarez has got to come back on the show.
I had this conversation in the makeup room with some of our team who covers it, and I'm like, because we were talking about the conversation I had with Kathy Wood and Milken, and she didn't buy into BICO, the first ETF, Bitcoin Futures ETF, and we were talking about that. And I just said, I am still trying to understand, and even our team says there's just so many questions about how this all works.
There are a lot of questions, and Mayor Suarez in Miami wants you to go to Miami to ask and answer those questions. The city has tried to hold itself out as one of the most crypto-forward jurisdictions in the country. Suarez has openly mused about the potential of using crypto to one day fund a city budget without taxes. Also questions about whether or not he's going to run for president or has national ambitions.
But to fund a city budget, so that means you're looking at it as an investment to appreciate?
It's crypto.
I love when your eyebrows do that. It's like
I have no idea.
It's like
city
a
coin.
Upside down V. All right, stick around, folks. We're going to catch it down to the close on this Thursday.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all advancing. S&P, NASDAQ looking at records right now. The S&P up 35, up 0.8%. NASDAQ up 176 points right now, up by 1.1%. NASDAQ so far this year up 19.5%. To put that in context, S&P this year now up 22.1%. The Dow this year up by 16.5%. 10-year yield 1.56%. We've got spot gold up 0.1%, $17.98 the ounce. Crude advancing 0.3%, $82.89 a barrel. Bitcoin up 3.1%, 60,773 right now on Bitcoin. All about earnings. Fresh signs that corporate America is delivering on lofty earnings expectations propel major indexes toward the best month in a year. After the bell, we will be hearing from a couple of key technology companies. Apple up now by 2.4%, Amazon up by 1.4%. New name for Facebook, that will be Meta. A lot of people wondering what will happen to FANG with that new name, Meta. Facebook shares right now up by 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Prime Minister Boris Johnson has summarized the COP26 climate talks next week as coal, cars, cash, and trees. That's green energy, clean transport, support for developing nations, and action on deforestation. The Glasgow summit, which was delayed by the COVID-19 pandemic, could succeed if it secures breakthroughs on two long-standing challenges. The first is to finalize the rules for a global carbon market that would give precise meaning to pledges on emissions. The second is to support mitigation and adaptation in poor and more vulnerable nations. It's easy to dismiss climate summits, but they've made a difference. The planet needs breakthroughs, and renewed ambition is vital. But governments need to show they're focused on implementation, not just lofty goals. Months of extreme weather have begun to turn public opinion from concern to demands for action. Glasgow is a chance to build on this momentum and accelerate progress. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left from the end of trading on this Thursday, this Friday's Eve, and bouncing around, but it looks like we're taking a little bit of a leg up here on those major equity averages near our highs of the day, certainly on the S&P and the NASDAQ. NASDAQ, once again, the outperformer this whole week is about those big tech names, and that includes some of the results we're going to get after the closing bell. We have Amazon, we have Apple, what am I missing?
Starbucks, coffee, but not tech.
Not really high
They
tech.
would call themselves tech with the online ordering.
There is an app.
The app is huge, and there will be a lot of questions about the app.
Well, someone who knows about all these brands is our next guest. Eric Clark is portfolio manager at Rational Dynamic Brands Fund. His fund, by the way, continued to beat just about all of its peers over the last 5 years, up on average 22% annually, putting his fund in the 96th percentile according to Bloomberg data. He's back with us on the phone from San Diego. By the way, top holdings in the fund include Alphabet and Apple, which, as we said, report after, Apple reports after the close. Google already reported.
Earlier this week.
Trying to keep it straight.
Amazon too.
Yeah, exactly. Eric, how are you?
I'm great. How are you, Carol?
Doing well. So let's talk about, first of all, can we just go to a tweet? Because you put out a tweet, and you tweeted about the name change of Facebook to Meta. And you said, what happens in a few years when we all realize we actually like being outside and enjoying real life? What happens? Do you have some thoughts about this one?
Well, probably about 3 years ago, I was constantly saying, in my opinion, Facebook has a real brand problem, and it stems from a lot of their business practices, et cetera. So I mean, on one hand, it's good to see them finally address that that's an issue. You know, they've told people in their earnings release that they're going to spend like $10 billion on the development of this metaverse through CapEx. And so, you know, a brand name change focused on the future driver of growth that's logical, and it makes a lot of sense. I'm just skeptical about what the metaverse looks like and what kind of revenue can be generated. And, you know, my cynical nature, even from my tweet, that's great. If I go in the metaverse, am I going to be advertised to death there too? So in the real world and on the metaverse, I don't know. I don't love Facebook in general, so I'm probably not the best guy, you know, to opine on the positive parts of Facebook.
Do you hold any Facebook?
We do not. No, it's been a good trade for us. We traded it, you know, I don't know. I put a little note to my team saying, hey, you know, we're about 8% of the way from the $1 trillion mark, and it'd be shocking if we didn't kiss that level, just like Tesla did the other day. And when that happens, if that happens, we're out. And that's what we did, and we haven't been back since.
You know what's interesting, just staying on Facebook, is the idea that the company is going all in on this. They're saying, hey, we believe in that this is the future so much, we're changing our name. What if it doesn't work? What if we don't want to be in that metaverse, like you said?
I think that it certainly changes the risk profile of the business, and you know that's okay. You know, that's their decision to make. It's such an unknown, and I do see there's some real value in the metaverse for work and for business.
Right.
It's already there with gaming, and there's social commerce happening inside of gaming already. So in some way, it's just an extension of that. But the other part of that, what that actually looks like, what the demographic of people that are going to be in the metaverse is clearly, I'm 53. You know, call me a dinosaur. I like the real world. I like to smell, touch, and taste. I don't know that you're going to be able to overcome that in the metaverse. So This is clearly a next generation demographic story. And, you know, we'll have to just see how they build this thing. And they're certainly, they've gone all in from a CapEx perspective.
Well, if I go all dystopian on everybody, if we continue on this trajectory when it comes to our environment and climate, we won't be allowed to be outside. And so a metaverse, no, I'm sorry, but if you think about it, that we might need to be inside and that all we will have are metaverses in terms of safety. So there you have it. Sorry, dark day on Thursday.
It's not that out of this world. There are parts of the world that where you don't want to be outside because of pollution.
All right. So, okay, Eric, let's get away from the dark side.
On that note,
Eric. Meanwhile, back at the ranch, you do own Amazon. They're going to be a report after the close. We're going to be all over it. We want to see what's going on with e-commerce. You know, might the Amazon Web Services take care of any weakness within the e-commerce part of their business? What are you expecting? What is it that you like and continue to like about this company and this brand?
Well, I mean, the stock in general hasn't really done much for the last 12 months. I don't love any stock that goes hot into a print. But, you know, overall, the thing is largely underperformed because they're in their spending mode. And when they spend, they're hiring, you know, an absurd amount of workers with higher pay. So certainly one side of the business is going to be, you know, hire and spend, so a lot of big expenses. But, you know, the history of Amazon is when we spend for a period of time, then we reap the benefits of that spend in forward quarters. So, you know, I don't really know one quarter to the next, but I'm sure AWS is probably going to be strong. The trends on that side of the business will be good, maybe to offset some of the CapEx and the spending that's happening on the other side of the business. But, you know, I love the business. I love the brand. So it's just a buy on dip for me. It's been a top holding, and, you know, you don't love it that it hasn't performed real well for a year or so, but it tends to do that. It ramps up and then it tends to consolidate for a while and then it ramps up again.
Do you love both the e-commerce? Do you love the Amazon Web Services? Do you love all the business, just quickly?
Yeah, I love it all. I love it all. I mean, it serves different markets, and, you know, if you're a small business, you hate Amazon, but the reality is it served a purpose, and we all love it even more after COVID. So we're that much more loyal to the business, and their logistics is no joke.
Okay, just 30 seconds left, Eric. Apple, also one of your top holdings. They're reporting after the bell, too. What are you looking for?
Yeah, I mean, could see some softness because of the supply issues. I mean, demand is not a problem for their products, and particularly the iPhone 13. It's just hard to come by. So any misses that come today will just be made up when they have some supply. So any dips on that one, I'll be aggressive and buy that too.
Any dips you'll be buying. So any dips on that or Amazon you'll be buying?
Correct.
All right, good to know. Really love it. Thank you so much. Really appreciate it, and fun to follow your tweets as well. Eric Clark, portfolio manager of the Rational Dynamic Brands Fund, top performer in the past 5 years, joining us on the phone from San Diego. Folks, just a few minutes left here in the trading session. We took a leg up. We're going to finish pretty much at their highs of the session, so that's up about 0.6% on the Dow Jones Industrial Average, up 0.9% on the S&P, and the Nasdaq better by 1.3%. So just seeing some buying into the close. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, our complete market coverage live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close on this Friday's Eve.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Shonali Bassett counting you down to the closing bell, here to take us beyond that bell. It's a global Metaverse simulcast. We are here with Carol Bassett, Tim Stenovec, and of course, we're across television, we're across radio, we're in YouTube, we're in the Metaverse, we're across it all. And I mean, Carol, moving away from the Facebook rebrand, what else caught your eye today? I mean, the fact that big tech does so well.
Yeah, listen, I was going to say meta buying into the close here, because what's interesting is to see the momentum buying into the close ahead of some very, very big earnings. You mentioned Apple, you mentioned Amazon. We just had on Eric Clark of the Rational Dynamic Brands Fund. He owns both Amazon and he owns Apple, and he said any weakness, he'll be buying on that opportunity.
Well, speaking of earnings, going into earnings this afternoon, when we do expect to hear from Amazon and Apple in just a few minutes, 82.5% of the companies that have reported in the S&P 500 thus far have beat. A positive surprise on the bottom line, Taylor.
You know, and it's interesting, I know we're all focused on equities on this big day that big tech, of course, continues to rally. Yields are actually rising. I know we've sort of been talking a lot about the inversion of the 20s, 30s curves and weaker relative to the 2s and the 5s 7-year auction that we had today as well. So, Shonali, perhaps maybe a little bit of that reflationary trade underway within bonds.
Wildly interesting what's going on with yields, but also in Washington, which, you know, we're still waiting for a lot of news on that front.
Yeah, whether a deal will ever be struck, whether we indeed can see the infrastructure deal tied in to that of the softer infrastructure deal as it's known, Carol.
Yeah. Listen, it's, you know, the common themes are going to be what we're going to be talking about in just a few minutes as these earnings come. It's going to be supply chains. It's going to be, you know, what business picks up, Caroline, for some weakness maybe in another part of the business at these companies.
And as the closing bell rings upon us, we see volumes up about 24% on the NASDAQ, and we're seeing it push higher, up 200 in excess of 200 points. 207 is sort of where we're closing. 15,448, 212, 1.4% higher. Significant moves in the S&P 500. We're trading up almost a percentage point. 44 points is higher. 4,596 is where we closed. Dow Jones up 0.7%. 239 points are at 35,729. And then let's look at how the Russell 2000 outperformed for once on the day. We're up more than 2 percentage points. That's 45 points. 2,297 for the Russell 2000 index, Carol.
Yeah, and as we await Amazon, as we await Starbucks and a few others, it was pretty broad-based buying. We saw 406 names in the S&P 500 higher today, 97 lower. Despite some economic news today, Taylor, that was a bit weak, whether it came to the GDP number, the labor market, though, those weekly jobless claims, that reminded us that we are still recovering.
Yeah, really interesting. A lot of the commentary I read about third quarter GDP said don't get too nervous here because the jobless claims, like you said, and perhaps maybe pushing forward that things look a little bit better.
All right,
Carol.
Let's get to Amazon crossing the Bloomberg terminal. So third quarter EPS, 612. That compares with the estimate of 896. Looks initially like a big miss there. Third quarter net sales, 110.8 billion. That too looks like a miss versus the estimate of analysts we surveyed of 111.81 billion. Let's get to some of the metrics. Fourth quarter net sales. So we're talking about the outlook here. 130 billion to 140 billion. That also looks light. The estimate out there is 141.62 billion. Online stores E-commerce, are people shopping? $130 to $140 billion. That's the estimate for the fourth quarter. That too, Caroline, is light, 141.62. So that net sales outlook number for the fourth quarter, that is light, and that's why we're seeing some selling down almost 3% here in the after hours.
And I want to be digging into sort of what they're seeing in terms of supply chain issue, what they're seeing in terms of a desire to get out the buying. eBay, of course, is one of the worst performing stocks on the S&P 500 today after it sort of guided to a slightly weaker holiday season that many had been anticipating. But they see their operating cash flow decreasing overall. They said, we've always said that we're going to confront it with a choice between optimizing for short-term profits versus what's best for customers over the long term. And Andy Jassy, of course, relatively new at the CEO at Amazon, saying we choose the latter, and you can see that during every phase of this pandemic. So they're talking up about their desire to help their workers. Of course, this is a company that's having to potentially pay more as they have threat of strikes here in New York.
That's something that Andy Jassy, the idea of paying more, refers to in the earnings release, saying in the fourth quarter, we expect to incur several $1 billion of additional costs in our consumer business as we manage through labor supply shortages, increased wage costs, global supply chain issues, and increased freight and shipping costs, all while doing whatever it takes to minimize the impact on customers and selling partners this holiday season. It'll be expensive for us in the short term, but it's the right prioritization for our customers and our partners. We just spoke with Eric Clark, portfolio manager at Rational Dynamic Brands Funds. He holds Amazon. He said if it does dip, Taylor, he's going to buy it because quarter to quarter, it doesn't really matter to him. If they're in spending mode, it means profits down the line.
Right. Well, and you see that, of course, within the lower free cash flow from operations, free cash flow in general. And what's interesting, though, on the flip side of that is the continued stellar growth of AWS, which I believe here is a 39% year-over-year growth, and how much of that has continued to fuel this profitability. Carol, when you take a look at the shift between the fulfillment and the spending, and then the shift within AWS.
I just want to make one point, is that what was interesting is I do think they thought that AWS would be maybe enough of an outperformance to maybe offset what we're seeing in terms of some of the misses in this company, and it's not certainly playing out that way, Sonali, when you look at the after-hours trade.
Yeah, absolutely, because just recapping here, they've missed not only on the EPS by almost $2 here, they're also falling short of expectations when it comes to that forward forecast for the fourth quarter, which is normally a pretty gangbusters quarter for the retail industry.
Yeah, and it's interesting how much they're focusing in on their entertainment as well, talking about the games launch, talking about the #1 movie streamed that was Cinderella. But we're also seeing a company that continues to think about its devices, how much the Echo is continuing to sell well, the Fire TV devices as well. But this is a company that we've got to remember is so broad. AWS, the significant cash cow really among them, and saying they've had significant customer momentum over there, Tim.
Yeah, it's been a tough year for Amazon too, particularly the second half of the year. In fact, since Andy Jassy took over as CEO, year to date, the company's up by about 5.8%, shares down by 4.2% now in after hours trading. That's well below the 21% advance of the NASDAQ 100 so far this year.
Yeah, really interesting here as we're taking a look at all of the traditional, Caroline mentioned Amazon Video. I'll quickly just go back to AWS because you wonder if that's where the focus is to help offset some of those investments. And announcing, Caroline, some new initiatives. Take over, more breaking news.
Starbucks coming out with its fourth quarter comparable sales. And actually, it's a slight miss. The estimate had been for 19% growth overall in like-for-like sales. They post a 17% increase. When you're looking at their net revenue coming in at $8.15 billion, that is indeed a bit of a beat. We're seeing China under pressure. Of course, they've had the wave of COVID, the Delta variant there, and indeed some government-exerted shutdowns. Fourth quarter China like-for-like sales down 7%, but that's slightly better than the market had been expecting, and they have an adjusted earnings per share of $1. But this is a company that is still seeing perhaps the U.S. not opening up as quickly as we'd anticipated. 22% growth in U.S. like-for-like sales. The market wanted to see 24% as we all got back to the office with our coffee in hand.
And I think it's really interesting, Caroline, that you point out mostly missed across the board. U.S. is lighter. Carol, international is lighter. China appears to be the only sort of outperformer on a relative basis, though it is still a decline.
Well, and this is, let's not forget how important this company is to so many of our lives, and it's such an important part of our marketplace. 1.7 trillion in terms of market cap. I've been looking at the press release, just operating cash flow down 1% to 54.7 billion. Free cash flow decreased to 2.6 billion for the trailing 12 months, compared with 29.5 billion for the trailing 12 months ending September 30th, 2020.
Are you talking using Amazon now?
Yes, I've gone back to Amazon. Forgive me.
I was going to say 1.7 trillion market cap for Starbucks. I knew coffee
It's a
was
lot of
important.
coffee.
I know coffee is important to all of us too. But what's interesting is, and going back to Eric Clark, who owns this company, he's a fund manager. He's into big brands, those well-known brands, and he said this is a company that's also spending big, and it's sometimes we don't see the payoff for several years. And this is a mode of operating that we've seen, you guys, from Amazon before.
I'm going to go back to Starbucks. I'm thinking about coffee this afternoon right now. Down about 0.9% in after hours right now. Hey, one thing that I'm keeping an eye on, at least in the earnings call that we get later from Starbucks, is what they're saying about commodity costs and coffee prices, because that is certainly going to be something that investors are looking for. The company essentially came out yesterday saying that they are going to raise wages around the U.S. to $17 an hour on average, up from $14 an hour. That's not going to start until this summer, but they telegraphed that well in advance. But you do have to wonder how that's going to hit on the bottom line in the next couple of quarters.
Yeah, absolutely. And we have also buybacks that Starbucks is talking about $20 billion in buybacks and dividends over the next 3 years. Starbucks giving investors something to hang on to. As you say, they worry about those margins, though those margins did increase quite a bit from a year ago, at least, given the changes in the COVID landscape. But to your point, a lot of costs ahead.
Costs ahead, but that's why probably the shares are pushing into the green, up 0.75% now, as they pledge to do $20 billion in payouts to their investor base in buybacks, in dividends. Notably, this is a company that's 22 buys on it and only 1 sell as it stands. So a company that many like, and as they look towards more plant-based opportunities, they look to diversify what they offer. But we have to, of course, Tim, as you were saying, question the costs, whether it be coffee supplies, whether it be kitting out their new cafes, and whether it be the labor costs that they face too.
All right, so we've got Starbucks down about 2% in the after hours. I'm watching Amazon down 3%, more than 3% here in the after trade. Just a quick rundown of really the key headlines. Taking a look at the outlook, the company sees fourth quarter net sales 130 to 140 billion. That's a miss. The estimate on the street is 141.62 billion. Sees several $1 billion of additional costs in fourth quarter, and we're just seeing some disappointment. And Amazon Web Services, the cloud computing unit, one of the few bright spots in the third quarter. Sales of 16.1 billion did beat the estimate of 15.4 billion. Investors, though, are looking at that holiday outlook. Cloud computing is not diverting their attention. Thank you, Spencer Soper, our tech reporter, giving us that analysis. It's just not enough for investors to feel confident right now.
No. Meanwhile, investors trying to find some confidence when it goes from Amazon down 3.6% indeed to a little bit of pressure on Starbucks as well, as it looks as though they're a little bit softer in their sales in the United States, Carl.
All right, that's going to do it. Our market wrap. We've got shares of Amazon down 3.5% in the after hours, Starbucks a little bit lower, and then we're waiting for Apple earnings, so that's going to do it. Our comprehensive market coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. That's a wrap, everyone. Catch us again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
We got Starbucks and we got Amazon. We're still waiting on Apple. In the meantime, a check of the latest world and national news. Over to Nancy Lyons in Washington, D.C. Hey, Nancy.
Hey, Tim. President Biden says he's reached a historic framework with Democrats in Congress on his sweeping Build Back Better agenda, even though it's been scaled back quite a bit. He says now is the time for action.
We spent hours and hours and hours over months and months working on this. No one got everything they wanted, including me. But that's what compromise is. That's consensus. And that's what I ran on.
Biden says this package will be paid for. With details on that, we check in with Bloomberg Washington correspondent Joe Matthew.
They're going to pay for this with a 15% minimum corporate tax and a surtax as well, 1% surtax on stock buybacks. That's important to a lot of our listeners. Also a surtax on millionaires. 5% for those making $10 million or more, an extra 3% if your income tops $25 million.
But Bloomberg's Joe Matthew says that billionaire tax is gone. You can hear more all about this with Joe on Bloomberg Sound On at 5 p.m. Wall Street time on Bloomberg Radio. Well, Facebook is being rebranded. It's now called Meta. Founder Mark Zuckerberg making the announcement today.
The word meta comes from the Greek word meaning beyond. For me, it symbolizes that there is always more to build. There's always a next chapter to the story.
Zuckerberg says in their next chapter, they'll bring people together through VR technology. Global news 24 hours a day, on air and on Bloomberg Quick Take.
Thank you so much.
We're doing a little bit more research on all those earnings coming out.
I'm just looking. I'm digging into these earnings.
Yeah,
You want to start with Amazon?
No, yeah, I do. Stock's down about 3.8% here in the after hour. Here's some of the headlines. Fourth quarter sales forecast misses estimates. Shares probably down the most because of that headline. Holidays will bring several $billion in extra costs. Third quarter EPS also missed estimates. Sales, though, however, pretty much in line with estimates. AWS, web services, online, cloud, it is a bright spot, the cloud, forgive me, the highest growth since early of 2019. And the expectation was, Tim, going into this, that maybe AWS will be enough for investors to divert maybe any disappointment when it comes to concerns about one of the core businesses, right? Is that all the stuff that's being sold online? And that doesn't seem the case, at least on the trade right now, down almost 4%.
Yeah, a lot of stuff really notable in here from Andy Jassy, especially in the commentary, particularly long commentary at the beginning of the release. The company said that they expect to incur several $1 billion of additional costs in consumer business as they manage through labor supply shortages, increased wage costs, global supply chain issues. It'll be expensive for us in the short term, but it's the right prioritization for our customers and our partners. The company particularly warning about extra costs in the holidays, getting those packages to consumers. Where do they get the employees?
Exactly.
And how do they get them in time for the holidays? It's been an issue for Amazon in the past, and they've had to. They've gotten upset with delivery partners in the past, and they've taken more in-house as a result.
They're going to get hit probably or potentially on a couple of levels. There's labor costs, just finding enough people, then paying them. You've got higher gas costs. That's another thing, just transportation, logistics. We do all the stories about everything sitting in the ports, whether or not they'll have everything to deliver. So if you think about it, it's kind of a perfect storm in a obviously bad way. In terms of Amazon, potentially. Starbucks, real quickly, down 1% in the after hours, so some disappointment there from investors as well. Headline, fourth quarter comp sales, always a key metric when it comes to restaurants. Up 17%, sounds strong, but the estimate was for a gain of 19%.
Want to see those people getting back to work and drinking their Starbucks.
Exactly. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Amazon lower after earnings. Stocks at a record. This update brought to you by SEI. Asset managers don't get results that are off the charts when their solutions are off the shelf. Learn how SEI's operating platform can turn infrastructure into a competitive advantage at SEIC.com/IMS. After the bell, Amazon's sales forecast missed estimates. Also said it sees several billions of dollars of additional costs in the fourth quarter. Amazon after hours down by 4%. We are awaiting the latest numbers out of Apple. Apple shares finished the day higher, up by 2.5%. Also, Starbucks reported quarterly sales that trailed estimates. Starbucks down 1.3% after hours. Facebook, meanwhile, changing its name to Meta. Stocks rallied to another record today as signs that corporate America is delivering on lofty earnings expectations. That propelled major indexes toward the best month in a year. S&P up 44, up 1%. The Dow up 239, up by 0.7%. NASDAQ up 212, up by 1.4%. 10-year down 8/30 seconds. 10-year yield 1.57%. Gold up 0.1%. 17.98 the ounce. West Texas Intermediate crude up 0.6%. 83.14 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thank you so much. A lot going on. Apple we're still waiting for their earnings. Amazon is out, as you know, stock definitely lower here in the after hours. Let's get more on the results, their business. Back with us, Bob O'Donnell, President and Chief and Analyst at Technalysis Research, based in Foster City, California, joining us once again on the phone from there. Bob, how are you?
I'm good, Carol. How are you?
Doing well, doing well. Let's get to it. Amazon, investors a little bit disappointed. Do you think they should be?
Yeah. Well, yeah, I mean, obviously expectations were pretty high, and the misses were, I think, bigger than a lot of people have expected. And frankly, given how much people have been up buying online, I think there was this thought of between online sales and, of course, AWS, which has been this machine of growth and income for them, that things would continue to be very good. Look, the overall numbers are still super high. This is part of the problem is we're in the law of big numbers now. It's very hard to continue growing when you're as big as you are, as they are. But obviously things like, supply chain issues undoubtedly has probably had an impact. And in fact, the early comments out of Andy Jassy suggest that part of the reason why the forecast for Q4 is a bit low as well is, in fact, the additional costs. I mean, look, they've been building up their supply chain. Nobody does this better than them because they have such a huge supply chain across so many places. And we've seen the company evolve over time in the same way that they build up AWS, which was a home-built tool for them to then turn into a product. They've been building up their logistics business as well to eventually to the point where you can imagine that becoming a separate capability for them. But bottom line is, when ships start slowing down, they buy planes, and then they ship things over, right? I mean, these are the things that a company of their size does, and that's what they're...
A little bit of technical problem there.
Yeah, we're going to work to get Bob O'Donnell, President and Chief Analyst at Technalysis Research.
In the Metaverse, that would not happen.
You went there. But shares of Amazon after hours down about 4.3%.
Yeah, I mean, the headline is Amazon giving that forecast for holiday sales that fell short of analyst estimates, signaling that the pandemic's boost to online shopping continues to fade. So, yeah, that's it. Bob O'Donnell, I think he's back with us. Bob, please continue in terms of your thoughts on Amazon here.
Sorry, yeah, no, and I'm not sure where the glitch occurred, but I had mentioned, they were, when given the issues with things like shipping containers and boats, they buy planes and they stick products on planes to get them over because they've been preparing for this ever since, Prime Day of the summer. They prepare for the holidays. They've hired hundreds of thousands of people. They said 1 million people applied for jobs as part of their career day. So they clearly recognize, the challenge that they are going to have and that there are going to be costs involved. And that's why I think and again, I don't know when it cut off. Why Andy Jassy, I think, said they're going to be spending a lot of money in the near term on people, on logistics, on flying products as necessary from various places of manufacture in order to make sure they can deliver the things that people are going to be expecting from them in Q4.
Bob, let's think about what Amazon has done over the course of its relatively short history. It's been able to go into spend mode, and when it's in spend mode, the profits certainly take a hit, but that tends to pay out for investors a few quarters later, a few years later.
Yeah, I mean, remember that for years and years and years, in fact, exactly to your point, Tim, that they were not making any money at all, despite huge amounts of income, because, in fact, they were spending on the infrastructure they felt was going to be necessary in order to build the warehouses and the distribution systems and everything else, as well as, of course, for the cloud side, investing all the computing hardware they needed to run AWS. And so you're absolutely right. I mean, there's a long history of doing this at the company. They see this as another time when they need to invest significantly more, both for the retail and online operation, as well as clearly for AWS. And then as they start to build out some of their other businesses, advertising, which is obviously there's much lower costs associated with that, so that's easier. But a lot of the businesses they're in are very resource dependent and resource heavy in terms of costs.
And let's not forget, I'm looking at our write-through on this, the last line of the story, Amazon Web Services, AWS, the cloud computing unit that brings in most of Amazon's profit, posted sales of $16.1 billion, up 39%.
It's such an important thing. Such an important thing to keep in mind. If you think about Amazon's revenue, it does not come from AWS, the revenue, but the profit absolutely does. It's way more, it's way higher margin than retail.
And again, they invested for years in AWS before they were able to get to that point. But that's been done, and they're continuing to do it. That market, to be fair, is getting much more competitive between Microsoft and Google and IBM and other folks getting into the cloud business. But Amazon's still clearly the leader, and that market, thankfully for all of the parties involved, it continues to grow.
Right, exactly. And as our Eric Clark that we talked from the Dynamic Brand Funds, he said he'd be buying on the weakness, and we do see Amazon down 4.4% in the after hours. 30 seconds left for you, Bob. Metaverse, Meta, Facebook. What's your takeaway?
Yeah. Well, I just, you can't help but think that this is meant to be a distraction from all the issues that Facebook has had. And I think it's going to be confusing to a lot of people. I mean, look, just as Google renaming the parent Alphabet really, at the end of the day, didn't have much of an impact. That's probably what we'll see with Meta. But initially, it's going to be confusing because they're so focused and say, oh, no, we're Metaverse first, when the vast majority of the world is not ready for the Metaverse, right? They're still stuck with, the IRL, as they like to say. We're all still in real life, and they are going to be for a long time.
Hey, that's okay with me.
I know. I like reality most days, not every day. Bob O'Donnell over at Technalysis Research. He's president there on the phone in California. We're watching for Apple earnings.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Apple just crossing the Bloomberg terminal, and fourth quarter revenue, it is a miss, folks. They are also, they talk about how much money they've returned to investors. A lot, billions of dollars. The stock is now down, almost 7% in the after hours.
Yeah, down 4%. One more thing, Carol, earnings per share was in line with expectations, $1.24.
Exactly. They returned over $24 billion to holders during the quarter. Services and Mac revenue reaching all-time highs. Let's get a little bit more of the breakdown. Charlie Pellet, of course, watching this. But Charlie, investors, there's disappointment here.
Indeed, and Apple, obviously a major story after hours. Worth repeating, fourth quarter revenue, $83.36 billion. Estimates, $84.69. That is the red headline on the Bloomberg Professional Service. And as you pointed out, Apple did return over $24 billion to holders during the quarter. Apple stock, though, is moving lower after hours. The other major story after hours, another big tech name, Amazon.com, stock we were just talking about, shares now lower by 5.4% on Amazon. Bob O'Donnell is the president and chief analyst at Technalysis Research. He was our guest right here on Bloomberg Business Week.
But obviously things like, supply chain issues undoubtedly has probably had an impact. And in fact, the early comments out of Andy Jassy suggest that part of the reason why the forecast for Q4 is a bit low as well is, in fact, the additional cost.
And again, worth repeating on Apple, fourth quarter revenue, $83.36 billion. Estimates, $84.69 billion on Apple. So two key reports, Apple and Amazon both reporting after the bell. The other big tech story today, Facebook changing its name to Meta. Records on Wall Street, the Dow, the S&P, NASDAQ all advancing. Records on the S&P, records on NASDAQ today. S&P up 44, up by 1%. NASDAQ up 212, up 1.4%. The Dow advanced 239, up by 0.7%. 10-year yield 1.57%. Gold up $2 the ounce, up 0.1%. Crude oil up by 0.6%. And that's a Bloomberg Business Flash.
And just to rehash, because it's an important one, Apple is such a big part of certainly our equity averages. As Charlie mentioned, that fourth quarter revenue number, that was light. Service revenue for the fourth quarter was a beat. Fourth quarter wearables, home, and accessories, that was a little light. EPS was in line. Mac revenue was a little light. Products revenue, that was light. iPhone revenue, that was light. This is a big one, $38.87 billion versus an estimate of $41.60 billion. iPad revenue, that was a beat. But we are seeing the stock, I mentioned down 7, but I meant down $7. Now it's down about $6.70 in the after hours. And Tim, that is good for a decline of 4.6%. We'll get some more analysis on this one because remember, it is a big part of the NASDAQ 100 and certainly the other equity averages.
Well, let's talk of business schools and particularly my alma mater, Columbia Business School. Joining us now is Dean Costas Maglaris from Columbia Business School. He joins us on the phone from New York City. Dean Maglaris, great to have you on the show. And it's been more than a year, I believe, since we had you on the show, and it's been quite the year because you took over at Columbia in 2019, just before the pandemic hit. So give us an update on how things are going as dean at the business school.
Thank you very much for having me. Nice to be talking to you, Tim and Carol. So things are looking great. We're all back in person in our last semester in the campus, in our main campus at Columbia, where we're in Uris Hall. And in 2 months, we're moving to Manhattanville, a few blocks away, in 2 beautiful brand new buildings that we're completing right now.
Stocks rally to another
to house the school and be a long-term home for all of our community. So we look forward to welcoming you in person after January, when we're going to be in our new homes.
Well, Dee McGlaris, it's so nice to have you here. I have to say, I remember I worked at Columbia Business School when I was an undergrad at Barnard, and I remember when yours hall was built as an extension. What does an MBA mean? I mean, that was an important era, and it was an expansion of the school and a build-out, and this was many years ago. What does the future mean for an MBA? What is the significance of it, and what do future MBA students kind of need to be putting front and center, and how it's shaping the academia and the academic curriculum up there?
So the world of business has changed dramatically over the last several decades, I would say primarily due to technology, before that globalization. And the role of business has also changed dramatically. We see businesses right now being asked and proactively entering the arena to sort of take an active role in thinking about societal questions. So in some sense, business education is itself evolving. So first of all, digital transformation and how this has impacted pretty much every area, everything that we do. If you think about our lives right now, from how we work, how we shop, what we eat, how we move around, how we move our money, how we invest our savings. You were mentioning supply chains earlier, how we design supply chains. Everything has been impacted through this wave of digital transformation. And in some sense, business education needs to perfectly reflect that and prepare students for that digital future of business.
I'm wondering...
Entrepreneurship, innovation... Yeah, go ahead.
No, go ahead.
Entrepreneurship and innovation is playing a bigger role right now, and I think will continue to play an increasing role, and that's an area that business education needs to continue to invest. And I think if you ask yourself, if you step back and ask what's the future look like, what's going to be the force that will disrupt pretty much every industry, every sector of the economy, and what you will be doing about that, that's going to be the sort of response to climate change. In some sense, there is going to be drastic change, and businesses will have to play a huge role to address that. And that's going to be a major driving force in business education in the future.
I'm wondering particularly about STEM in business education. You got a BS in electrical engineering. Your graduate work, your PhD, was in electrical engineering from Stanford. When I was at CBS, we had a Python class, but even this was just a couple of years ago. It was still, in my experience, relatively traditional in quotes. And we just have about 40 seconds left, and then we're going to come back with you a little more. But I'm wondering what your thinking is about incorporating more STEM.
That's the future, for sure. And I would say two things. One is bring more STEM material into the MBA curriculum. But the other thing is bring engineering students to co-work together with business school students and designers so that we can actually put experiential learning into the fore. So it's not, we don't want to train necessarily engineers, but we want to train professionals and managers that can truly collaborate in cross-functional environments and manage and lead and have positive impact in their companies and in society.
You made me think of Kathy Wood, who's looking at companies who are crossing so many different things, like a Tesla. That's a car company. It's a technology company. It's so much more. Like, we have to incorporate everyone. We're going to come back with the Dean of Columbia Business School in just a moment. First up, though, back to some of your top business stories and actually your world and national news stories. So much going on. You're talking a little bit business, too, with Meta, Nancy Lyons.
That's right. That's in here. As you've been hearing here on Bloomberg, there are big changes in the social media world. Facebook founder Mark Zuckerberg has announced a new name for his company, Meta.
Our mission remains the same. It's still about bringing people together. Our apps and their brands, they're not changing either. And we are still the company that designs technology around people. But now we have a new North Star to help bring the metaverse to life. And we have a new name that reflects the full breadth of what we do and the future that we want to help build.
Zuckerberg says the metaverse will include having people congregate and communicate by entering virtual environments. President Biden is heading overseas for several meetings with world leaders, but before leaving Washington, he announced a framework of his economic plan has been drafted in hopes that Democrats will unite behind his social spending and climate policy agenda.
I've long said compromise and consensus are the only way to get big things done in a democracy, important things done for the country. I know it's hard. I know how deeply people feel about the things that they fight for. But this framework includes historic investments in our nation and in our people.
Biden told lawmakers his presidency will be determined by what happens in Congress in the next week. Former New York Governor Andrew Cuomo has been charged with a misdemeanor sex crimes charge. He resigned in August after an investigation detailed a pattern of alleged harassment against female workers. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance. Thank you so much. Nancy Lyons there in our DC studio. So let's talk about Apple, because we're seeing the stock move in the after hours, falling under some pressure here.
Yeah, shares are down more than 4% right now, down about $6.35. The company beat on iPad revenue, but it missed on Mac revenue. It missed on iPhone revenue for the fourth quarter. It missed on fourth quarter products revenue. It beat on services revenue. Wearables, home, and accessories revenue was a miss as well. And services and Mac revenue reached an all-time high. A real mixed bag.
Yeah, exactly. Thank God for our live blog right now. Ian King, our tech reporter, saying by region, it looks like China showed the biggest upside compared to a year earlier, with revenue almost doubling. Significant. All other areas were up too compared with the same period in 2020. We're seeing Apple suppliers fall after the Apple revenue miss. Remember, when you think about supply chains, Apple has a big one. And so I love that function on the Bloomberg where you look at the companies that sell to Apple and the companies that Apple sells to, and how it's all related, and you certainly see some playing. Stock is falling nearly $20 billion year-over-year growth in the face of supply shortages, though. Still very impressive, our Mark Gurman writing. Here's our Apple guru. He says the big difference this year is the presence of over a week of iPhone 13 sales during the fourth quarter, whereas the iPhone 12 missed last year's fourth quarter. iPhone growth represented an additional $12 billion in revenue for the fourth quarter this year. That phone, always so important.
Apple, again, didn't give guidance for the current period. The market, though, appears to have become accustomed to this, Ian King writes, but given the fact that most other tech companies have continued to offer an outlook, when do investors call them out?
Yeah, I don't know. There was a big miss on wearables, home and accessories. Important, the Apple Watch Series 6 last year launched during the fourth quarter, whereas the Apple Watch Series 7 didn't go on sale until the current quarter. Look for Apple to explain this on the earnings call in about 25 minutes. Thank you, Mark Gurman.
Greater China was $14.56 billion in the 3-month period, up from $7.9 billion. For comparison, the Americas still by far the largest provider of revenue, that coming in at $36.8 billion.
Maybe not a surprise. I can't forget that Bloomberg story that talked about maybe iPhone sales, right, being a little bit weak because of the supply chain. So anyway, we're seeing the stock down 3.7% in the after hours. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. Lots of after the bell earnings news, but first, do want to begin with a developing story headline from the Bloomberg Professional Service. Zendesk buying Momentive and the Survey Monkey platform in a stock deal. Apple shares now down by 4% after hours after quarterly revenue missed analyst estimates, hurt by supply constraints that took a bite out of the iPhone maker's sales. Fiscal fourth quarter revenue amounted to $83.4 billion, missing estimates of $84.7 billion. Again, Apple shares after hours tumbling by 4%. Also after the bell, Amazon's sales forecast missed estimate, and it said it sees several $1 billion of additional costs in the fourth quarter. Amazon lower now by 4%. Starbucks out with quarterly sales that trailed estimates, showing looser pandemic measures are not bolstering results as much as investors had expected. A day of records on Wall Street for the S&P and NASDAQ. S&P up 44, up 1%, all about earnings. NASDAQ up 212, also at a record, up 1.4%. The Dow up 239, up by 0.7. 10-year yield 1.57%. Spot gold up 0.1%, 17.99 the ounce. And crude, West Texas Intermediate crude up 0.5%, 83.10 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You know, Business Week, known for its legendary and closely followed ranking of the world's business schools, and always at the top of those lists is the Columbia Business School. So we are delighted to continue with the Dean of Columbia Business School, Kostas Maglaris, a professor of business also at Columbia. So Dean Maglaris, one thing I want to ask you is leadership and the responsibility. And I feel like you've been touching upon this. We recently spoke with the president of Johns Hopkins, Ron Daniels. He's got a book out about what universities owe democracy. What do today's leadership, what do they owe society?
Well, let me make a couple of comments, and I'll focus mostly, rather than on university leadership, on business leadership, which is the subject matter, let's say, of business schools like ours. And I think there, business leaders today play a much more complex or rich role than they were doing in the past. In some sense, there are increased expectations from business leaders to be active participants, both on the dialogue about societal issues, but really more importantly, to think about how corporations, how businesses can incorporate societal questions into their strategic planning. So how can they be part of the solution?
Right.
And I do believe that that is a way forward. Leaders need to be more socially responsible and think about the long-term effects of the strategies and the strategic priorities to their employees and to society at large. And that's what we're seeing.
Well, and I think about, how that relates to something like ESG. I did a smart panel, I think, here at Bloomberg Equality. We had an event with the former chief investment officer of sustainability over at BlackRock, who's there for 1.5 or 2 years, but who now is very outspoken and a critic of ESG. Like, what's the responsibility as so much money pours into that space? It's hard for the BlackRocks and other investment houses to maybe turn away from it, right? It seems to be all the rage, and yet many would argue that this money is not going to really maybe move the needle when it comes to stopping climate change.
Well, so the asset flows into ESG strategies or investment vehicles have been increasing rapidly, and it is true that there is, one could argue, still sort of data issues and sort of investment issues, like, do we have an investable universe to sort of absorb all of these funds? But that will change over time. I think you're touching the issue about the environment and climate. I think we do need to make huge investments in that area, and that's going to be a very long play. When we electrified this country, it took us 70 years.
Right.
It took 70 years to electrify this country. Now we want to do something a lot more complicated. We want to do it globally, And ideally, we want to do it faster.
Right,
So
but
we need.
Right.
Go ahead.
No, what I was going to say is, though, but as somebody on the panel said, it is if you're buying into an ESG fund, which in many ways are often kind of almost index-like funds, making an investment, not my words, somebody on our panels, if you're making an investment in Salesforce, how does that necessarily slow down climate change? That's different from maybe impact investing where you're investing directly into a company that's creating alt energy. So I guess I'm just wondering about leadership and, transparency, how you see it and what the responsibility is.
So let me paraphrase a little bit, perhaps a different version of that comment. Well, one thing that we could do in the future is we could track the extent to which companies that have made net zero pledges, the extent to which they're transitioning their operations actually to net zero in time. And so that could be a way, if we could measure that and audit that, of in some sense knowing which players are further along that journey than others. They're clearly the solution providers, but most companies are not going to be solution providers.
Yeah.
They're going to adapt their operations. They're going to change how they manufacture goods, how they produce and deliver their services. And the question is, we could be tracking that.
Right.
That's one. Go ahead.
No, forgive me. We've got to run, and I hope we can continue this conversation because you really are seeing so much. Certainly, there up at Columbia with your team there. So I hope we can get you back. Kostas Maglaris, he's Dean of Columbia Business School, joining us on the phone there on this Thursday.
Well, let's get back to Apple earnings. Shares down 3.5% in after hours. Joining us now is Bloomberg Intelligence Senior Software and IT Services Analyst Anurag Rana. Anurag, what sticks out to you?
Well, it's not down enough. I mean, it should have been down more a little bit.
Really?
Well, to be honest with you, I mean, at this point, they haven't given any clarity as to when this thing is going to be solved. At the end of the day, that's all that matters in terms of when can we get the parts to, get the shipments in.
When you say this thing, you mean the supply chain?
Yeah, supply chain problem, because it's not a demand issue. I mean, everybody out there is looking to upgrade. The economic conditions are good. Carrier incentives are very strong. It's a 5G phone. Camera is phenomenal. All those things are right there. But if you can't get a phone, I mean, you're not going to recognize any revenue. So all I want to know is, by when can I expect to see this resolved?
Anurag, I feel like they are the master of supply chain. So when they've got problems, it makes me say, wait, what?
Which is why I'm saying that to me, the market, overall, I'm just not surprised that we are not seeing a bigger reaction to some of these things out there, and not just Amazon or Apple, but other companies too, because you're right. If both of these companies can't handle it, what luck do the smaller people have?
Right, exactly.
Is the revenue miss a result of the supply chain challenges because people are waiting to buy a phone later? I know this only takes into account a couple weeks of the new phone.
I don't see any other logical reason. I mean, no,
really?
but the new phone was only a couple of days, so that's not.
Couple of days,
So the miss is entirely, most of it has to do with the older equipment that's out there. But people account for that. It's not as if when they model these things, they don't take that into account. So in my view, bulk of this has to be supply chain oriented. I can't think of any other logical reason.
So what could they say that would placate you and make you a little bit more comfortable about the outlook? What would really freak you out? And just got about 30 seconds.
If they basically say we can ship as much as the demand comes, we will be able to ship it over the next 1.5 quarters or so, 2 quarters, it's not a big deal then.
Okay. What would freak you out?
If they say, well, they can't do it in the next 6 months, then people have to wait for iPhone 14, which means the next year is a wash. Then we have to wait for, 1 more year for sales to go up.
All right, so the stock's down 4%. How much do you think it should be based on, this analysis?
It's tough to say, to be honest, because I do want to see what they have to say on the call. The call will dictate a lot.
All right, we know you're busy. We know you did TV. We know you've got some research to write. Thank you as always. Always appreciate it. Apple shares right now down about 3.8%. We're done with Thursday, Friday's Eve.
Oh, it's happening.
It's done. Have a good night, everybody.